Danny, thanks again for running numbers. It's March 2023, and we're going to take a look at all the data from the past cold weather that we've had. Give you a quick rundown. Rates are back up, but also home sales and prices are back up. We're looking at a rebound here. We're trending more towards a seller's market again after our seasonal lows that we've experienced recently. I think people are getting over their some of the trepidations that have followed all the changes in the market. We're still a weird market. We're still more balanced, but we're starting to trend more towards the seller side. So we're going to run through the numbers here. Danny, what do you think?
Yeah, no, I think that's a great way to describe it. I mean, rates continue to be a little fickle, right? So we can see on the first graph here that after things peaked back in October and November, just over 7%, they started to come back down, which was great. I mean, that was after a very long trend of things going up. So I think that people finally got over the shock of some of the rates and took a little comfort in things starting to turn that corner and come back down. We had a couple of little bumps here and there, but then they settled again closer to the 6% range, towards 7%, but not to 7%. So that's going to continue to be a watch item for us, and clearly that has a big impact on the activity in the market. But that's been one of the bigger drivers for us over the course of last year.
Yeah, and that's going to reflect again. Obviously, rates are on everybody's mind. But that's going to reflect again in some of our trailing numbers here, which our next one is sales. So obviously, we're looking up sales for last month and then the previous months prior. It doesn't reflect what's in contract now. But what we're seeing is, Danny, I'll let you give us the good news here.
Yeah, I mean, I guess the way we talk about it is the market's just waking back up, right? And we know that there's this cyclical nature to the market. Nobody's really doing a lot of work, like we talked about around the holidays. Nobody wants to be selling their home. We're busy. No one wants to move in the winter. So what we saw is a trailing off, not just due to the slowing of overall activity because of the rates, but just because those last few months of the year are slower anyway. So if you look at this chart, you see kind of the normal bell curve. We hit January, that was the low, and now we've rebounded pretty well in February, even with a short month. So we're up 18% in terms of overall home sales compared to January. Still down year over year. So you can see that, that's the impact of the rates, is that down 15% from last year. But seasonality is responsible for that up 18% from the previous month. So the expectation from here, Rob, would be, in your experience, what should we expect in March and going forward?
Yeah, I think once everybody starts to get used to the rates, we're just going to keep going up. The biggest takeaway I see from this little bump here, we've been tracking this for over a year now, is that jump is a lot more significant. 18%, that's bigger than we've seen in the past few cycles coming out of the cold weather. So January, February of last year, February to March, we're going to see that continue to rise. I think people are used to the rates. And I'm very happy to report that everything's not tanking like it was. All of our metrics before were going down with the exception of average sales price. And that's not the case anymore, right?
Yeah, no, I mean, that's right. And if we can fast forward here to the next big slide and see the next rebound just around average sales price. So you can see that, again, this was what, a 7-month decline, right? From the peaks in the summer. And now we're up $15,000 basically in the average sales price to an average sales price of just over $340,000 in February. The other thing to keep in mind, and this has been the trend all along, even though things have been coming down since summer, every one of those months has still been higher than the year previous. So we can't forget about the huge run up in average sales price over the last couple of years before things started to cool off. So even though things may look like they've been down over the last several months or half a year, every one of those months is higher than the year previous. And that's the same here. We're up 22,000 in the average sales price compared to February of 22.
Yeah, I think a lot of the news that gets made, we're down overall numbers, and I think that as a economic driver is big news, and that's being covered all over media everywhere. Everyone says it's a down market. You're still up. Your values are up. If you decide to sell, you're selling for more. that metric hasn't stopped growing, but the number of people that are deciding to move has gone down. So as an economic impact, that's all gone down. I think that's where the doom and gloom comes from, because I don't think that people are experiencing bad news or bad vibes when they do decide to sell. So another big indicator of a shifting market up is the next slide here, Danny. Over under asking price, that changed quite a lot this past month.
Yeah, I mean, I think it's significant, right, compared to what it's been doing. And if you look at this, I mean, this graph is really just saying anything in the blue is within plus or minus 5% of the asking price. So we'll just call that at asking. The green is anything above that, so 6% or above asking, and the orange is anything 6% or below asking, right? And I guess for much of the early half of last year, this was similar in a way. The blue area was about 60%, but it was those green and that orange that was really swapped, right? We were seeing a lot of activity, a lot of heat, a lot of people going above asking, and that green band was a lot bigger. And over the course of the second half of the year, that shrunk. So what we're seeing compared to January of this year is that little green band actually picked up 3% from the blue area, which is encouraging because that would tell us that we are starting to get a little more competition for some homes, and people are starting to bid not just 5% above asking, but maybe even more than that.
Yeah, and we're seeing that in practicality with our clients out there. A lot more competition all of a sudden, and they are willing to pay over again suddenly. Now, keep in mind, the number over asking went from 10% to 13%. That's not 3%. That's a 30% increase on its own number, right? That's a lot more people that are willing to do that. So that's the biggest metric already to me that things are shifting back towards the seller's market. We're also seeing a start to slow down in price reductions. I feel like that's been a weird metric to track over the past few months. Danny, can you take us through that number?
Yeah, and you can see this one turned a corner too, right? So this retreated from its high of 33% for the last 2 months. And again, you can see the 7-8 months prior to that, it's been just a steady climb upward, right? As people were trying to find the new normal in terms of pricing, in terms of, maybe less people participating in the market overall. This just led to a lot more questions around how homes were being priced and what people were willing to pay and what people could pay with the new affordability calculation they were doing with the higher interest rates, right? There was just a lot of guessing going on. And it took a little time for people to wrap their heads around it. So, for this to turn a corner, I know it's only down just like 2% from 33 to 31, but that's encouraging because we stopped the trend of up, right? And certainly our hope is that in the coming months that continues to move back down.
Yeah, that indicates not only the buyer's comfort level with the rate, it also starts to indicate the seller's comfort level with how the market's actually trending and stopping the madness of just pricing it wherever they want. They actually have to pay attention now. And this is indicative that more people are starting to do that. Positive things. The next one, days on the market on average. Danny, you want to run us through this real quick, and then I'll have some comments on this.
Yeah, and I think probably one of the things, not to steal your thunder, but I'm sure you're going to say that, again, as the market is starting to shift and again, wake up again, that's kind of what we're seeing here in these two different, calculations of days on market. So, the blue series is the average days on market. You can see that that's grown again over the same time period as all these other numbers that we just looked at. It's peaking now at 33 days on average for the homes that sold in February, up 3 days from January's number. But the gray columns are what we added this month, and that's the median days on market. So that's just the midpoint. If you look at that, that's also risen over this time period, but now it's started to fall. And it's not just fallen a little bit. It's gone from 14 days in January to just 9 days in February.
Yeah, I think the median is actually probably a better tracker for us in this regard than the average. So if you think about it, this is days on the market. So as fast as a home sells ever is 1, 2, 3 days on the market, right? That's universally true. However, if you decide to overprice your house and just wait it out and just hang in there and sit on that number keeps getting bigger, and it's going to skew the rest of the numbers consistently and a lot. So the median is I think, a better tracker. I feel like when we've been looking at days on the market and we've had numbers like 19, 25 days on the market average. That didn't feel right in practice, right? We don't see that. I never expected that for the sellers. The median's a better indicator here, it seems like. And the fact that that took a big dip down follows the rest of the numbers we've been tracking, which indicate a turn that just happened last month. So into the spring market, obviously some of that seasonality, but I feel like we made a bigger change than we expected. And that indicates everyone's comfort level with the market rising again. So that's a good thing. So Danny, let's do a quick words of wisdom takeaway from our numbers here. Obviously, there's a lot of change. I think something buyers and sellers need to know. You mentioned this earlier. Everyone's getting comfortable again.
Yeah, no, I think you're right. Everybody is starting to get adjusted to what the new normal is. I mean, I think it's pretty clear we're not going to be back in the 3% mortgage rate zone anytime real soon. I think that while there are definitely affordability challenges at 7% or 6%, things that people maybe didn't have to deal with a year ago at this time, they're also not having to go 10% above asking and cash out of pocket just to get into a deal because the market was so red hot at the time. So I think people are starting to get over the shock and awe of the rates and start to see that there are some positive trade-offs with the way the market's been lately. And there's actually some opportunity out there for some buyers. And I think that, even though things are going to increase in terms of the level of competition, as things ramp up for the season, that's going to bring more buying opportunities. And if you're a seller, it's just going to bring more competition for your home.
Yep, I agree. And I think that the one thing everyone needs to remember, long-term wise, and I don't want to be the old vet in the room as far as like, I remember when the rates were like this, but I do remember the rates were like this. We've been at this rate before, okay? And I want to say last year was the anomaly year. The big spike in numbers as we've been tracking. Last year was the one that was the anomaly. We're actually back to 2018-19 pre-pandemic market numbers as far as home sales and pretty much tracking all the metrics we've been doing. We're back to 18-19 levels. That's before a world event where everything changed, right? No one said that was a down market before. So I feel like we're in a more balanced space. Hopefully we can continue to get buyers in without the crazy wars that we've been having and they have to deal with rates. I get that. You'll get used to that. And if the rate changes down in the next couple of years, you can refinance. So I think more people are realizing that. We're getting more comfortable with this. We're off to the races again pretty soon here.
Yeah, so definitely game on, right? I think that's what we're saying for the year. Yeah. And we'll expect when we come back next month, I don't know, if we were betting people, we'd say that we'd see continued, increases in activity, both in terms of, total sales, likely, increases in average sales price and improvement in days on market as well. So that just would largely be driven by the seasonality that we expect to happen like it does every year.
Yep. So just be prepared. It's getting busier. If you're thinking about entering the market, we have a market again. We're in full throttle. So thanks for running those numbers again, Danny. We'll check in next month and in between if we have news to report.